Hello and welcome to another daily market update by Market Intel. Today we want to take a look at a stock we've never looked at before on this channel, and it's providing us with a great reward to risk ratio and a great opportunity potentially. So we're going to take a look at that. It's the Shopify stock. Let's go. We are on the Market Intel website, dailymarketupdate.com. Here you can register completely for free and you'll get all these updates on a daily basis about cryptos, tech stocks, and so on. Today we want to take a look at Shopify because it's at an interesting spot. I would say we start with the one-day chart first. It gives us a great understanding of the context, which is always very, very important. Now, here on this chart, you can see that the expectation is that we are in a larger wave 2 correction. Wave 2 corrections for Eliott-Wave analysts and traders specifically are always very interesting because at the end of a wave 2 we can typically expect a reversal and the start of a third wave rally, which is typically very aggressive. Third wave in an Eliott-Wave cycle is typically the most aggressive wave, so we're looking at that at the end, after the end of a wave 2, but we want to get positioned as close as possible towards the end of such a correction. The wave 2 is typically the correction, the first strong correction in a 5-wave cycle. Wave 1 in an uptrend sends us higher. The wave 2 is correcting that uptrend. It's a counter trend move. And then the third wave is typically the FOMO wave. It's the wave that many people who sold in the wave 2 because they were losing are missing, and then they have to chase it, generating that upside momentum. And that's where the third wave typically gets its drive from. So if you look at the chart here, you can see that this wave 1 that I mentioned topped in what would look like a diagonal pattern. So the wave 5 was an ending diagonal, as it seems. These are typically followed by a rapid decline. This is all documented in the theory about Eliott-Wave. At the end of a diagonal pattern, we have to expect a sharp decline, which happened. It looks more like a 5-wave decline. So the expectations would be in our preferred scenario that this was only the A wave of this wave 2 correction. The move to the upside has been quite weak and looks very choppy. So the move to the upside is expected to be a B wave, and then a C wave to the downside is still to come. And this C wave would likely send us down into the region of around $19.90, maybe even lower. We will have to see where the B wave exactly tops in order to calculate a target for the C wave, but at the moment we have a trading area down there, so we have to consider that overall we could still go lower. It's actually the expectation, but with a probability of 27%, we are already in the third wave, so this shouldn't be ignored. It is possible. I mean, the decline was sharp into the 2022 lows, but only in an alternative perspective it's considered as all of wave 2 in beige. No, in the primary scenario, which, as I said, we assign a 73% probability, the wave 2 is still unfolding. So I would say now we need to understand that we're likely in this B wave. So what do we want to do to understand the microstructure? We need to take a look at the shorter time frame, which would be our 4-hour chart. So on the 4-hour chart, you can see what I meant with possible trading area opportunity. Now we've had a very sharp decline, obviously. So we're dealing not with a high quality setup necessarily, but the idea is that we're still in this B wave, which would be considered a WXY structure with a Y wave still unfolding. We have a WX, Y, and in the Y wave we have an ABC. So we are likely now in a B wave pullback with a probability of 60%. So it's fairly balanced probabilities, but we have some clear levels to watch. So expectations are for a C wave to the upside to unfold, which would take us above $93, but only really as long as we're holding that $45.50 level. That's the key support. But above that, we've got a Fibonacci support zone, which ideally should hold. If this is really a B wave pullback, we should see a reversal from this region, and it is defined between $52.88 and $62.74. So from here, we are watching for a rally in a C wave with a 60% likelihood. Now that likelihood might reduce if we get a break below $52.88, and below that level, it becomes much more likely that a larger B wave correction is still unfolding. Internally, after an A wave topped here, it just means that the larger B wave rally is still unfolding, but the internal structure of that larger B wave rally is different. And in that case, in the alternative scenario, a larger A wave topped this year at $93. We have a larger B wave, and then a C wave could start from there. You might want to wait for a first 1-2 setup in wave C. So the best indication that this C wave has started, which is a 5-wave move, is to wait for the wave 1 in wave C and the wave 2 pullback. Sometimes they are clear, sometimes not. But for a more speculative long trade, you could pay attention to this trading area here. Just note that you have to focus on risk management because the trend still seems to be down locally from that top that formed early in the year. I think it was February at $93. But overall, we are watching for higher prices either directly or after a more substantial B-wave correction. That's the update about Shopify. Hope you liked the update. If you did, please hit the like button, subscribe to the channel, activate the notification bell so you don't miss any new videos, and also let us know in the comments which other cryptocurrencies or tech stocks you want me to analyze this week. Thank you very much. Bye-bye.